Well, guys, let's just say this is not the ideal way to wrap up the week. And honestly, as now we're slowly wrapping up the year, it's not ideal. It's not ideal, but the stock market is selling off. We're down across the board today. The VIX is up almost 20%, and we have to break it down in this video. We're going to go over the charts, stocks I'm looking at, what I'm looking to do. But first, take a sip of your coffee. Cheers, guys. Hit that like button. Do not forget to subscribe and get your free stocks from Moomoo. Open up your account using that link down below. Fund it with at least $100. You get 5 free stocks. Fund it with at least $1,000. You get 10 more free stocks. And overall, your uninvested cash for now will earn up to 8.1% APY, which, guys, come on, it's a no-brainer. So use that link down below or go to stocksurfs.com/Moomoo. And with that being said, cheers. Let's get into it. And by the way, guys, I'm feeling a little bit under the weather. So if I sound a bit off, my voice sounds a bit, crackly, quaky, a couple voice cracks. That's why. Your boy's not feeling the best right now, but I still want to crank out a couple videos for you guys today because, well, stocks are in free fall. We got to cover it. So it's about 1 p.m. East Coast time right now, and we have the S&P 500, get ready for this, guys, down over 1.5%, as the Russell's down over 2.1%. Very big down move for the Russell, as that one is leading the losses today, guys, in terms of the U.S. indexes here. And QQQ is down, 1.9%. About $10. Looks like we're coming right back down to test this trend line and the 180 SMA on the 4-hour chart. And which one did I leave out? The Dow. The Dow's down 1.1%. Also retesting the 180 SMA on this 4-hour chart. And the VIX, guys, man, the VIX is up 19% now, but earlier in the day, it was up even more. I think at one point, 22%, 23%. Let's see here, guys. Yeah, 25% in the green was where the VIX got to earlier in the morning. So, yeah, volatility is kicking up. The VIX is up. There is some fear, maybe uncertainty right now as the year is wrapping up. We're getting closer to Donald Trump coming into office, right, in January, which it's right around the corner now, guys. We're getting there. And you can make an argument that we're selling off right now because of profit taking as well. Maybe some people are taking some chips off the table, locking in some profits, taking some money out of stocks, going cash before the end of the year, maybe saving up or putting some money aside for taxes, right? That could be kind of what we're noticing right now. And yeah, I mean, it's not out of the ordinary to get a bit of a sell-off to end off the year, especially considering how bullish we've been this entire year. I mean, look, guys, you all know this. On the 4-hour chart, on all these indexes, we've been uptrending all year, obviously, right? We all know that. So we're getting a bit of profit taking, end of the year sell-off. Maybe people are, putting money aside for taxes, whatever it may be. And we do have some head and shoulder action. You guys see the head and shoulders here on SPY. You guys see the left shoulder right here. If I get this out, left shoulder right here, got the head right here, boom. The right shoulder is starting to form here. We're failing at the neckline, which is at about $602 per share. So this looks like maybe the Bears are here to play in the short term. We have that forming on SPY and on QQQ, I think, as well. Let me zoom in a bit. Yeah, you guys see that head and shoulders on this as well. We have the left shoulder right here. The head's right here. You guys see it. The right shoulder's right here. So let's see what QQQ and SPY, for that matter, what they do at the 4-hour 180 moving average. That's going to be a big support for both of these ETFs. That's where we're at now, and we're also holding this trend line, which, well, it needs to hold for the uptrend in general to maintain itself, right? So what do you guys think? Let me know your thoughts in the comments. And by the way, have you signed up to my email list yet? Every Monday for free, I'm sending out my top 3 stocks right to your email. We do a little write-up. We break down the charts. And again, it's free. All you guys have to do is put your first name and your email address using that link in the description box, also pinned in the comment section. Make sure you guys join that free email list. So yeah, I mean, every stock essentially on my watch list, except for a couple, are in the red right now. We have somehow Nikola and Beyond Meat. Those are the only two in the green right now. Maybe Hershey and Warner Brothers slightly in the green. But other than that, we are seeing a bloodbath, guys, in the stock market, with stocks like Tesla down over 4%. You guys see right here, we could argue that this is a double top at about 480, 485. Now we're starting to, dump back down towards 390, maybe 400, right around this big support on this 4-hour time frame. And honestly, guys, I feel like Tesla could open up maybe as an opportunity in this window right here, especially as a trade. If it comes down to 390 to 400 in this window right here, I'm eyeing it up, guys. So that's TSLA. I mean, you name it. Every stock essentially is in the red. I mean, we have Nvidia down on the day, about 2.5%, clearly getting rejected at about 140, which has been a resistance point. A big spot of resistance here over the last couple of months. Many different times we've gotten hit at that point. So Nvidia's down 2.5%, getting hit there again. Netflix is down on the day about 2%. Netflix's earnings are coming up in about 3 weeks. On the 21st of January, after the bell, we're going to get Netflix's earnings. I'm actually very curious to see how those numbers come out. But we have Netflix down a bit on the day. Google, also known as Alphabet, it's in the red, down 2.2%. Disney's down, which we've covered before. Disney looks interesting on the 4-hour time frame here, but we have to break out of $113, $14 for this to really start breaking out, which we're not getting quite yet. But I'm, keeping my eyes peeled on Disney here on the weakness for sure as a trade. And let's see, there's nothing's completely collapsing. I mean, OKLO's the most red one on my watch list right now, down 5%, 5.5%, not that bad. And quite frankly, guys, this looks pretty good. We still are above both moving averages on OKLO, and we're actually testing the top of this channel as support right now, and maybe we bounce off of it. Maybe, just maybe, we bounce off of that. So what do you guys think? Let me know your thoughts in the comments. There you got your first voice crack. Like I said, guys, a little bit under the weather here, but still had to crank out these videos today. So let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe and get your free stocks from Moomoo. Open up your account using that link down below and fund it with at least $100. You get 5 free stocks. Deposit at least $1,000. You get 10 more free stocks. And overall, for now, your uninvested cash will earn up to 8.1% APY, which, guys, it's a no-brainer. So go down below to stocksurfest.com/Moomoo or check out the link in the comments. It's there, guys. Get your stocks. And with that being said, cheers. I'll catch you in the next video.